The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. How are my trading warrior brothers and sisters doing today? Everyone okay? All right. So I want to start off with crypto. Greg covered it yesterday, confirms that this move is the beginning of something. Okay, I was talking about it at the 78.6 level. Greg brought that up. Now, this looks like a flagpole to me. You could take a picture. It's pretty classic. Will we, work lower towards 35.20, 34.80? Possible. But, a lot of people are most likely waiting for a dip. So sometimes it doesn't accommodate, So that's why in certain markets, it's a little better being a little early than being a little late where you have to chase. And it's good that it's not just rocketing away, because there's already enough doubt and pessimism in crypto that most of the crypto guys I've interviewed or communicate with are waiting for confirmation on the upside. So they're pros now, and they're only going to buy when the market's proving itself. I've seen numbers as high as 4,700. Then they'll think it's okay. It's up here. Some people will wait for it to negate this breakdown, but that's all, almost a double from here. So really, just a little sideways action here after Friday's Lazarus move, where that's what I think is going to happen in crypto. And it's such a tight trade where where you could be wrong. You should get out under 78.6, because then we're going to new lows, and then who knows, 3,000, 2,800. But from all this time, from this initial thrust and working sideways all this time, and for a while it was respecting 61.8, and then it tested 78.6 a few times, may have traded underneath it, never closed underneath it. So that's the crypto scenario. Steve likes Ethereum better, and it does seem to have a better structure, more lift, not as deep. Okay, not as deep of a pullback as Bitcoin, which shows more relative strength. And the strongest pattern, in my view, has been Litecoin. So Litecoin's already taken out these highs and was way above the low, hardly gave any back. So look at what it's being contained at, the 200-day. So interesting that we have it right here at the 200-day that it's stalled. So like them all, think you should be buying breaks now, knowing you're wrong under February lows, last month's lows. Everyone with me? I don't think they have much money, Dominic, left to lose. Thank you, Forex Gal. I think that, if you look at what's happened, except the people that adopted early, I mean, even this move back down to 3,000, they were paying $50, $100, $500, whatever. They made a fortune. So unless they leveraged it up here, they're still okay. And they've lived through, there've been other bubbles where I think it was Mark Yusko, who showed there had been two other bubbles and then 70-80% fall. Calispera, what's that? Constantinos. So I'm going a little interactive with you guys.
That means good afternoon.
Oh, okay. All right. Shalom, Constantinos.
Well, you should say Calamera, right? Calamera?
Oh, yeah.
Calamera is good morning, right?
Yes.
Oh, I thought it was an appetizer. Calamari.
Such an American.
Oh, God, I thought you guys weren't going to be here today, and that was going to be the only hope.
Oh, no, continue talking. You're fine.
No, it's okay. So anyway, there's crypto for you guys. And see what kind of team we have. The best on the net. And don't forget, maybe plan a trip to the Big Apple and hang out with the guys, hang out with Steve and Grega and Joe and maybe someone else. Be a surprise guest. March 10th to 12th, I believe the 11th is FX Day. They're going to have it's going to be a great expo. I think it's the best expo in the country. Don't you, Blake? You used to make the tours compared to like the Vegas Money Show, and then Boris said he was going down to Florida last week for their expo.
Yeah, I did. I wasn't a bit. I mean, I did the Las Vegas Traders Expo a couple of times, and this
How was it?
I mean, it's Vegas, and it was
Okay.
mostly equities. And so
okay.
this for currencies, it's the biggest currency. It's the biggest one here in the United States. Is the
Okay.
New York Traders Expo. It's it's currencies a big chunk of it. Where the Las Vegas Traders Expo is not so much. But Joe went there.
Yeah, Joe was there. Yeah.
Yeah, and I mean, he said it was all right, but the New York one's supposed to be really
they
really
do
much
it up.
better.
New York does it up. So
yeah, I'll let you continue on. Before I start. Go ahead.
Okay, buddy. So anyway, that's crypto. And if you don't have a crypto account, you can still follow like Grega does some pattern and plays on crypto. And I think Andre does sometimes. Anyway, here's an ETF. Well, I didn't even have to do that. Here's an ETF if you want to do it. I don't know why it's doing this. Okay. Get back to Blake. It's called GBTC are the symbols. So you can see, like most of the ETFs, it has a little decay in it because here GBTC actually made a new low last week before reversing. So that's a weekly, and he had a little gap up, not much of a gap, but it's coming out of here. So, I mean, there is potential here without the only disadvantage is, you can't trade it. Bitcoin trades all the time. So this closes with the New York markets. It's a trust. So you're not going to be able to do anything when, crypto's trading 24/7, except during regular hours for the NYSE. Okay, so anyway, that's something I talked about. I was buying it, right around this $4 mark. So looking at on a pullback, I think there's potential for, dare I say it, a double. So that's crypto. So we had a little pullback in the dollar, brought it up yesterday. Not much, but failed from 97.20. We'll see. This is pretty shallow pullback. I'm thinking that it's not completed, this pullback in the dollar, and even if we had a little higher here, that maybe we get a failing rally and one more push. To me, the major line in the sand is 96. So, I don't think we should, accumulation levels would be around in here because I don't think this is the top. This was a pretty, I'll ask Steve later, but I think we had 10, 11 days up in a row in the dollar from down here. That may have been impulsive, but I don't know. But I favor buying a break if we get one from here. And this was 200 points in the Dixie. So pulling back halfway, 96.20. And then if we get 1.618 of this, I know a lot of guys for a long time had targets up around 99.20 from 96. That's what it would measure if it's 1.618 of a 200 pip point advance in the Dixie. So if that's the case, I talked about it in the euros, I'd be careful about being short down here. And I'd like to see a higher low here, not just flush to new lows here, and then get some type of rally. I'll have to do the fibs, but, up towards 114. And then eventually maybe we head towards this 108 level. So hanging on by a thread. And I'll just wrap it with this. We've had great strength in the S&Ps. You know, it's still blown off. It's gone farther than I thought it would. I was a little suspicious about the 61.8. It looked a little too perfect. But on the daily and the 4 hour, there is some divergence, right? But what I think is a good market tell, and not necessarily that this is a top, is that crude oil has been joined at the hip like a Siamese twin to what's happening in equities. You know, they all went down late last year together. Crude and equities went down. They both recovered in January, right? But the nature of this recovery in crude is we're just flirting with the 61.8. So S&Ps have blown through the highs, and crude so far has only been able to generate a little better than 61.8% retracement. So I don't know, the S&Ps would probably have to go 200 handles higher for us to get to new highs. So this to me is showing relative weakness, which, you know, if you had to pick between, do I short the S&Ps, which are stronger than dirt, or short a market that had a big break and is just recovering with it, to me would be the preferred short. So everyone with me? Yeah, you don't have to agree with me. I just want to kind of make sure you understand my reasoning and rationale, because, you know, we're all captains of our own ship. Unless you have a money manager, or you have a signal service where, you know, you're just going the lazy way to make money. That's having someone else try and drop money into your account. But if you're a hardworking guy like the team, I know hours and hours are put into the research that we publish every day. So, you know, everyone says, what's the secret? You really have to be a hard worker. In fact, the people that I mentor, the hard workers are, you know, they know as much or more than me. I learned from them. And you could tell because they spend a lot of time on their analysis. They do all kinds of charts. They're looking at, different time frames, and it takes time, and it's hard work. So hire us and risk a buck to hire us. And with that being said, oh yeah, I will. If you're not satisfied with your $1 trial, I will send you a refund. And that offer is good ad infinitum. Okay, Blake, I'm through yapping, brother.
All right, thanks, Dale. How you doing?
Good, buddy. Good
so,
and
tired. Are you tired?
Yeah,
it's early.
You know.
It is early.
Yeah,
it's early.
I got early.
Did you? You know, I got up this morning.
You lose your reprieve. You lose your reprieve. What, in another month or so? You go.
Yeah, huh? Yeah. I guess time change is coming up soon. I got up this morning and I went to grab a cup of coffee, and my wife and my youngest come downstairs, and my youngest apparently got sick in his blanket, like. Yeah, and I'm like, I just want coffee, and I gotta look at my dollar Mex, and now I'm picking up like barf. It's nice. It was a pleasant.
It's your best trade. You know what, Blake? Yeah, you have a beautiful family. It's the best trade you made in your lifetime.
Ever. All right.
You know, so anyway, that's it. You don't get me going. You know how sappy I am.
I know, sappy Dale. All right. So let's talk a little bit about the market. So first of all, people were wondering what the hell happened to the cable, and no one knows. I mean, I was even looking at Citi here. They're like where is it? Pound unexplained move, you know, and they're like, yeah, the pound jumped higher. No one knows why. And it was like it ripped up and then came right back down again, unexplained. It was just one of those maybe flow driven type of moves. So I wasn't trading anything cable, so I didn't know. I wasn't sure what was happening, because it was just as I was getting up. The euro has reversed. Now let me show you why this is important. If you go over to the daily chart, okay, this is there's a lot going on in this chart, and I want to explain to you how nervous I have been, and I think I might have explained this yesterday being here. I was really nervous about being short. This is multi-month lows, like you know, this 112.50, 112.60. You can see we popped out of the channel, but man, we're just like knocking our head against the support. I was very nervous about being short. Daily sentiment index, the DSI was at 10 yesterday. Wow. Not yesterday, 2 days ago. And I'm like, yeah, I don't know if I really want to be short with the DSI down there. And then, you know, and then as it popped up to 113, I said, okay, I'm going to take a pop shot at it. I actually shorted some at like 112.90, and then I shorted some more at 113. 113 like 12 or something like that. So I had a cost average about 113 and change, just, you know, just about 113. And it continued to rally, and I had my stops pretty tight. I had my stops above 50, and I was only in not even a half size position for me. And then yesterday at the close, we started to pull back towards like we started to pull back towards the 20s. And I said, you know, I'm going to go ahead and take, it was at 26. And I said, I'm going to take my loss. And I think I took like a 20 pip loss. And I said, I'm a little nervous being short as we're so close to the support. Now, I'm not trading the euro, by the way, right now. But I'll tell you, one of the things that made me a little nervous here, or would make me a little nervous about being on the long side, is that we are, if you look at this trend line that spawns back from, you know, the bottom of January 2017, you can see we had broken that trend line. It's the black one, not the red one. Matter of fact, I probably should get rid of this red one just to minimize confusion here. Let me get rid of it. Okay, so you can see this trend line. We came back and we actually retested the underside of that trend line, and then we've come back down. Now, I'm not, like I said, I'm not shorting the euro right now. I feel like I should be short the euro, but I'm not short the euro right now. But that does make me a little nervous if I was long with the failure here. We didn't quite make the 38% retracement. What that does is that verifies to me that if we do break this 112.50, if this breaks, so let me just, you know, draw it out for you. If this breaks, I'm going to be aggressively short. Okay. If we break through those lows, then at that point in time, I'm going to, you know, I'm going to be a seller. So do I, or am I, short the euro? No. But if we do break the 112.50 level, that failure at this previous, you know, trend line, that failure right there confirms to me that we are properly moving lower. Now, frankly, I hope the euro breaks down. I want to tell you that right now. I hope the euro breaks down, and I hope the dollar comes out of its shoes and starts rallying like it's nobody's business. The reason why? I'm long dollar mex. I am long the dollar Mexican peso. If you are if you're ForexAnalytix subscriber, you see the patterns in play. There's only 2 right now, which usually there's like 5 or 6, but right, we've closed out a lot of our patterns in play as of late. You can see a lot of positive trades. Grega did have the S&P invalidate, but and then you can see the pound. But I mean, we've had a pretty good run as a team. And so, you know, we're just kind of quiet at the moment. I think that tells you a lot about the state of the market and where we're at. But the dollar Mexican peso is breaking higher. Now, I'm going to show you guys something. Let me pause my screen. Let me grab my emails. Email. Let me grab this report. Okay. Let me get rid of this. I'm going to show you guys something. Now, I just got this morning. And this is from Bank of America Merrill Lynch. I want you guys to read this. This is from this morning, or no, from the 6th. I'm sorry, 6th of February. So this I thought was really interesting. One of the gentlemen that I trade with is very much focused on the peso right now, on shorting the peso alongside with me. So we were sharing just some recent data or research. Now check this out. Read this. AMLO suggests reducing Pemex tax burden is forthcoming. AMLO announced this February 5th press conference that new measures to reduce Pemex's tax burden would be announced soon. So far, the administration's measures have fallen short of a significant reduction in Pemex's tax burden in the order of at least $10 billion a year, which could potentially stabilize Pemex's production levels. Currently, now this is important, currently, Pemex taxes represent about 14% of the federal government budget.
Wow, they're the biggest client then.
Yeah. So isn't that crazy? Now, Pemex, as you know, is in as you may know, may not know, is in a lot of trouble financially. So yeah, if you're long the peso right now, if you're long the peso, how nervous are you with this, knowing this stat? 2.2% of GDP. 2.2% of GDP. That is riding on Pemex. I'll tell you what, if I was long the peso, which I'm not, I'm short the peso, I'd be scared crapless out of my pants. Now I'm going to do a little technical analysis for you guys, just so you can see what I'm thinking here. First of all, the US dollar Mexican peso has been stuck in this triangle formation for the whole entire year up until now, up until yesterday, or is it 2 days ago? 2 days ago. And I'd been expecting an upside break because Pemex has been one of my main macro thoughts of why I'm short the dollar Mex. And I didn't have this report before, but I've read a couple other reports regarding Pemex over the last month, and this is the reason why I wanted to be short pesos. And now we've broken out. So we broke out on, well, I guess it was Monday, right? I was long the dollar Mex. I closed it before the industrial production numbers came out, and the industrial production numbers came out. It ripped higher. I bought it again on the break above 1919, and I've been trading it to the long side ever since. When we dipped yesterday and we held above 1920, now that's set up for a bull flag pattern, and you can see we're at our highs of the session. This bull flag pattern over the next couple of days takes us to 1952. The 38% retracement has been my original target at 19. Well, I have it at 1960, I think. But I'm targeting much higher than that. So it's at 38% retracement. It was basically 1960. We also have this previous resistance, previous support, previous resistance, should act as resistance again around 1970. If we get some risk aversion, my target then turns to the 618, which is at 1998, or basically 20. I think we can now I'm zooming out for you, so let me go ahead and do this. I think we can very easily, and I'm just going to draw this for you guys so you can see it, very easily just be in a big consolidation. You guys see that? Okay. So we are at, well, we're not at the mid-range yet, but you know, we're making our way up. We're near the lower end of the triangle. So of the longer term triangle. So if you are thinking, oh, I already missed the boat, did you? I mean, we're still at the lower end of the triangle. We get towards 1980, yeah, then your risk reward becomes very marginal as far as, you know, You know, it's not a great risk reward. But the way I see it playing out is playing it back into this triangle, maybe to the upper end of the triangle. I mean, we could, if the market gets some risk aversion, we could very easily stretch well above 20 on the exchange rate again. So, do I think the U.S. dollar Mexican peso is going to 22.25 on the exchange rate? No, I don't necessarily. I think that, you know, we're probably going to avoid a worst case scenario with Pemex. You would think, but hey, it's Mexico. What happens in Mexico stays in Mexico. So I don't, you know, who knows? We could very easily break out of that triangle too. But all I know is I want to be short pesos right now. And one thing that I am fairly confident about is AMLO is not an administration where I'm willing to put my money. I've been pretty vocal about this over the last several months as this new administration, very volatile administration, very spendy administration, very promising administration was going to come in. Olivier had left Mexico.
Nice.
Yeah, thank you. Thanks. He left Mexico. One of our traders in our chat room, he left Mexico to take his family to France because he was worried about the current administration. I mean, if that doesn't tell you anything, I don't know what does. And this is a trader that's been in our chat room for the last couple of years. So guys, you know, to make a long story short, I'm long dollar max, and I'm expecting a lot higher prices with dollar max. And you can see we're trading at our highs of the session. I think this bull flag pattern, at least you know where your risk is. I mean, my stops overnight were at 1917. So, I mean, I was only willing to risk to here. And I still am. I haven't moved my stops, but I was only willing to risk to here. That's where my stops were at last night, or they're still at. You can, you know,
Nice shot there, Blake. What do you think?
You can see my stop is at 1917. That's where my stop's at. So
if crude breaks, that should also underpin this trade, right? If we went under $50 crude.
Oh yeah. If, you know, the crude Mexico correlation has not been that strong in recent years.
Okay.
But people still trade off of it, and yeah, I mean, yeah, you get crude oil back at $45, and that's I don't think it's going to hurt. So
yeah.
Anyway, I laid out my case for a long dollar Mexican trade. I hope that makes sense to you guys. And, Olivier says, I had said since AMLO, I was I'm trying to read his comments. He's commenting too. So I had said since AMLO since AMLO was elected, and when I decided to get out of Mexico, we will see U.S. dollar Mexican peso at 25 within 12 to 16 months after the elections. Well, there you go. And you know, I don't know. I don't try to forecast that far in advance, personally, but I mean, you can see it technically that, you know, 21 would not be, or 2050 would not be out of the question. And, you know, quite possibly, I mean, if this is a weekly chart, by the way, guys, I mean, you know, you think about like a consolidation here, you know, the longer term consolidation like that. I mean, you know, to see it break higher to 22 to 25, somewhere up here, I can't really argue that, you know, especially if we start breaking out. I can't really argue that we can't see an exchange rate that, you know, way up there. So anyway,
We
shoot,
just got numbers.
CPI, it just came in.
Core CPI marginally. Well, actually, month on month, it's exactly in line. CPI, I think the numbers are roughly in line.
Yeah, this is a little stronger.
year on year, they're a little bit stronger, but month on month, yeah.
Yeah. So weekly earnings year over year stronger. Hourly earnings year over year stronger. That's good, right? CPI year over year is stronger. Month over month is a little weaker, but overall, I mean, good numbers. The dollar yen has actually pressed into the dollar yen has pressed into new highs. Now, the dollar yen, by the way, is at the 618 retracement. Let me get over the dollar yen. I forgot CPI was coming out. Thanks for alerting me. Dollar yen is right up around that 78% retracement. I actually think it's probably a decent short here. I just sold a little bit at 81. Just on this little spike up. I don't mind being short around here, frankly. Just sold it at 81. Let's see if I can cover it back down in the 70s. I'm just kind of scalping this one. Let's see. 76. Come on. 75 bid. 74 bid. I'll take it. I'm out. I just took 6 pips out of it. I could probably make more than that, but talking nice. And trying to trade when you're trading like a couple million at a time, I've not my strong suit yet. So back when I did the Morning Edge webinar, a lot of you guys probably remember I used to trade pretty aggressively on the Morning Edge webinar. Let's take a couple things into account. When for all those years that I was on the Morning Edge, I traded a much smaller account because it was my account. So I could trade a smaller position. I could get short the dollar yen and sit in it and not worry if it fluctuates, 20, 30 pips in my face. It's not going to be the end of the world for me. But when I'm trading for a fund and I'm trading, much bigger positions, usually 20 times the size that I used to be trading for myself, I get a little nervous when, I'm sitting in a position and I take a position and then I'm down $5,000 or, up $5,000. It makes it a little bit more difficult for me to trade, with the size that I do. So that's why typically I will, switch over and let Steve and Stelios take over after the data, so I can go focus really on my positions. All right, let me cover a couple of charts, and I know we have Steve's not going to be here today. He is in process of changing out vehicles. He's selling one and getting another, which. I'm a little bummed out because actually the first time that I met Steve, I rode in his Alfa Romeo. The car is cool. Isn't it, Stelios?
Yeah. We've been on a few trips. It's nice.
Man,
he's a family man now.
Yeah, no. He wasn't a family man when I first met him in person, but and that Alfa Romeo is cool. But anyway, he's getting rid of it and getting another vehicle. So he's got to deal with the paperwork today. Anyway, so he's not going to be here, but usually I flip it over to you guys so you guys can cover. But I know Andre is going to come in, give us a little bit of flavor on some of these harmonic patterns that you might be seeing in the market. So I'm pretty excited to bring Andre on. But before we do that, let's talk about a few of these other charts really quick. So, and by the way, the euro slumped. It's coming off again, and I want to reiterate, I am not short the euro. I hope it goes to hell in a handbasket right now, but I am not short. The Aussie has bounced. I'm a little worried about the Aussie because we had a false breakdown the last couple of days, and we're holding up. I know we're down right now, but a little nervous about being short unless equities really roll over. That would be a pretty big screw job, I think, for this pair, because if we had a false breakdown. We just squeezed everybody and then roll over to new lows. That's really just, that's what you're really taking out both sides of the market. Kiwi, super strong today. Now the New Zealand dollar spiked up to the 618 retracement, or very close to 618 retracement. The RBNZ last night, they actually, it was interesting. Every bank report I got, because I read them before I went to bed last night, because I was spending some time with the family. I was in the chat room a little bit. I sold the New Zealand dollar last night at like 28, or I'm sorry, 68, like 35, and I covered it at 68.20 or something like that. And then I just kind of, I got out of it, and I went, I just kind of, left the chat. But I read a couple of things just before I went to bed about that the banks felt that the market was really too optimistic of the comments that came from the RBNZ. But I read the statement, and it read pretty hawkish. However, I think that the RBNZ is really going to miss the mark as far as their assessment of the slowdown that China is going to have and its impact directly to the New Zealand economy. So a lot of smart guys that I knew last night were fading the New Zealand dollar overnight. I wasn't going to, because I had too big of a position on the dollar Mexican peso right now. So I don't want to, I didn't want to be, aggressively trading that. But the New Zealand dollar looks like it could fail here. And as long as it stays below these highs, I think selling rallies now, especially if, at the open, if risk appetite, picks up a little bit, selling it might not be a bad trade. Okay. Let's see, the dollar Canadian. I actually just shorted some Canadian yen this morning. I think this dollar Canadian, this right here is like a nice little inverted head and shoulder pattern in this building. But I sold some some Canadian yen because of the failure at the big previous support, current resistance. As long as we are below 84 yen, I'm a seller. So I sold some Canadian yen. So in essence, I want the dollar Canadian to continue to move higher. I showed you guys the dollar Mexican peso. I built my case there. Hopefully you guys have understand that. And then the Swissy. This is our chart of the day yesterday. And if you do not read the blogs, you can find it. It's free. It's on our website. Hey, look, if you're not gonna be a ForexAnalytix subscriber, okay, and you're not gonna get, I would say we update at least minimum 50 charts a day. Okay, so if you're not gonna, be a ForexAnalytix subscriber and get the at least 50 charts a day that we're posting, well, at least you can go to the blog and get one, right? So you go get the chart of the day. And yesterday, as I posted, the dollar Swiss hit multi-year trend line. Okay. Also put in a pin bar. You can see it's a little pin bar, almost a tweezer top on the dollar Swiss. You can see it here. Okay, so as long as the dollar Swiss is below this 101, I think the risk is lower now. So now if we get above 101, then that's going to be a pretty bullish event. I know there's a lot of resistance we need to take out to continue on, but I think if we get above 101, then the dollar Swiss is moving a lot higher. So US dollar Norwegian krona has backed off like we thought. We expected it to come back down to this support. And by the way, let me go over to the US dollar Norwegian krona. I know Jane was short in our chat room yesterday. which I thought was a really, really good idea, because I shorted the US dollar Norwegian krona and took very little out of it. I shorted it at let me pull it up here. I shorted it at 871, I think, and I got out at 869 something. So I didn't make very much. I just, but she took it short pretty well. We were looking for, and you can see here, we were looking for, and this is the 4 hour that I can show you, that's on ForexAnalytix, and you can read the updates too. We were looking for a failure at the 161% extension and for it to roll over. It rolled over, and we were looking for a bounce off of 862. And today we're trading at 862. Currently, we are at 864. So it's played out pretty almost too well. Very technical and very easy to read, the US dollar Norwegian krona. Now, as far as support goes, then, if we break 860, then, that's going to be a pretty bearish event. If we break through this 860, then we're coming all the way back down. Then you have to start looking at a longer term consolidation. But that was a pretty easy read, going all the way to last week. Once we cleared this downtrend line, it was a massive squeeze that ensued, and that you knew that if you were a ForexAnalytix subscriber, because we talked about that last week. So anyway, so that's just a little bit of a flavor on some of these pairs. Now I want to bring in Stelios. Stelios, good morning.
Good morning. Hello.
How's it going, man?
Very good, very good. We have Andre, I think, waiting. So I'll just go over a couple of things, and then he can take over about 10 minutes and finish off. Thank you, Blake. Everything's good here. What do
you make out of that big spike in the cable this morning? Did you see that?
Well, apparently, and our friend Bob on the chat room posted that it was apparently because of some futures flow, a big buyer in futures. Apparently, I didn't know that, but maybe that's what caused it. But there was, there's no headline. The state of the game in terms of the Brexit debacle is that we have a vote for the next vote for the next proposed agreement, whatever that is, on around at the end of this month, February 27th, I think.
All right.
And there's going to be some kind of debate tomorrow and some voting on some amendments which we don't know what they are yet. So it's just a big mess still. So there's no real news on the UK to cause that, not as far as I can see.
Yeah, it was. I mean, I read from a couple of different sources. They're like, I don't know what the hell happened. So big spike. I'll tell you what happened though. Amanda in our chat room, she just stepped in and she started selling at like 129.60. So she crushed it. She just, she's so great because she just runs in and she's like, oh, any spike in the cable, I'm going to sell it. So she got this big spike up here and started shorting into the resistance. So good job, Amanda.
She had been short some sterling pairs, and in particular the sterling Kiwi, which did pretty well overnight.
That's to say the least. New Zealand Kiwi was down, I think, 200 pips at one point. I don't know if it still is. Yeah, it still is about down 200 pips. Crushed it. So Amanda doing great work out there. And if you guys are in the chat room, she really just kills these pound pairs. I found myself on the opposite side of Amanda a few times, and it's not a pleasant feeling. So all right, what else do we have going on before we bring on Andre?
We had some pretty bad economic data out of Europe again. Industrial production out of the Eurozone, minus 0.9%. Month on month, expected minus 0.4. So the continuation of bad data out of the Eurozone is still there. It's not looking very good, I must say. So that's the one thing. And then the other thing which we have from the US is that Donald Trump yesterday hinted that he could extend the deadline, the March 1st deadline, which he's supposed to be raising the tariffs on imports from China. And, we're in talks, they are in talks, US and China. And he said that if we're getting closer to agreement by the end of the month, he said, and I quote, I'm going to let it slide. So that's what's happening there. And that gave a little push to equity markets overnight. And that's really it. We didn't have that much more apart from the. Did you talk about the UK? Oh, well, we had UK CPI today, which came in at 1.8% year on year. That's the first. Actually, no. The first print below the 2% target in ages. I can't remember when the last one was, and 0.1 worse than expected. So UK inflation is coming back in line with the target, and clearly the whole Brexit saga is having an effect on everything. So until we have closure on that, I think that the numbers are going to be less important than they used to be. Of course, they always count, but not as much as they used to.
Think of all the pent up demand once we get past Brexit. As long as it's some sort of deal. Obviously, a no Brexit deal is going to be like that's going to be a shock to the system, and the market's going to. I don't know how the market's going to take that. Obviously, selling the cable, but think about all the pent up demand that's in the UK right now. If there is some sort of deal that gets put together, which would be good for the UK, it's going to be really good for the UK. I think it's going to be, I think you're going to see some explosive data in the following, 6 to 8 months out of the UK, in my opinion.
Yeah. Even if you just take away the uncertainty, that's the main thing. It doesn't have to be a great deal. Just get rid of the uncertainty, and that's it. I think.
I did bring Andre over. He is now a panelist, so I'm going to unmute Andre. Andre, good morning.
Hello.
Hey.
Good morning, everyone.
Good morning. Hey, good afternoon. How are you?
I'm fine. Thank you very much. Can you hear me in perfect conditions?
Perfect conditions, Andre.
Okay. Great.
Hey, so I'm going to turn it over to you. I'm going to be here, but I'm going to mute because I've got to take care of a couple household things. But and Stelios is here, and obviously the coach is always here. So I'm gonna make you presenter. And guys, Andre, as you guys know, he's our in-house harmonics expert, and I love looking at his charts. It's like pure art because it's like it's like stuff that I can't see. So I love listening to Andre. So Andre, what do you see?
Well, can you see my screen? I'm not sure which one I shared, the MetaTrader or TradingView.
Pound US dollar, TradingView.
Pound US dollar. Great. Let me just change my screens here. And I need to change to my left screen. How can I change this?
Oh, I see all the little charts now.
No, I need to change my.
Oh, it says
the other monitor. So
it stop sharing and then reshare the other monitor.
But if I click that button again, it will show the same monitor. It doesn't give me an option to select the monitor.
Or what you can do is you can actually drag your chart.
Yeah, I can drag, but just because I have some notifications on this main screen, and I want to avoid that. But no issues. So pound versus dollar, as you mentioned before.
Wait, we don't see your screen right now.
You don't see?
No, we don't see any screen.
Now you can see.
Now we see the little charts. Yes. Now we see.
Okay. There we go. There we go.
Pound versus dollar, correct?
Correct.
Yeah.
Okay. So this is the bearish pattern that I shared among the community, the ForexAnalytix. For those who are familiar with this chart, you are already synced with what I'm thinking about. We can see the pound has found some support at the 50% retracement from the weekly support to the monthly resistance and weekly resistance above, actually not the monthly resistance, the weekly one. A Fibonacci set, and we are now facing the 50% retracement of this full behavior. So I expect at this point I don't expect any other movements from here unless my second target. I need pound trading at the 61.8, the golden ratio. Obviously, sometimes what I need is not what the market will print us. So, but I have my stops adjusted. This is one example of the trade that I took from above. So I shorted the market at the 88% retracement. This was the completion point for the pattern. We have reached the first target, the 38% retracement, as I mentioned here, this is my first target, half of my initial position size closer, break even my trade, and as soon as the market achieves the 50% retracement, I decided to close another portion of this trade. So I keep remaining, I keep inside this market but with a small, tiny position, holding for and waiting for the golden ratio. So I still believe there's room for pound to fall into these levels. Obviously, we have this bearish trend line or this descending trend line now being threat, and the market has violated that trend line, which is not a sign that the market will trade higher, but it can, and it has proven to at this moment to print an outside, eventually an outside return. What it means, the market will break it will print an outside candle outside the descending channel, the descending momentum, and then it will recover in the same direction of previously. So, but this is a trade that I have nothing to say more than waiting and managing the trade. So what we have at this moment, let me push just a list of a few charts that I want to share with you. We have euro versus pound. We have also a few not versus pound, versus yen. We have a few yen pairs trading, and I need to decrease my time frame in what I consider as a completion points or very close to completion points for harmonics. One of them is this one, this euro versus yen. As we can see here, I've shared this shark pattern at 224 extension. The market has printed a new resistance above the completion point, and then it started to fall. And from below, I identified yesterday the possibility to print two shark patterns. One of them at 1618 extension, completely ignored. The market has violated these previous structure highs, the previous structural resistance, printed new highs, and then it has violated the 224 extension, but it's now trying to, well, at least it's now falling from this level. Based on Fibonacci levels, and if we set retracement from the previous, the 4 hours support level to the most recent highs, we are now approaching, not approaching, but a few points above the 38% retracement. So the minimum expectation for this pattern is the 50% retracement. So that said, I will not be surprised to see euro versus yen retesting this virtual, and I call it virtual because it's not so common. I was expecting this channel to be respected with the formation of one eventual edge and shoulders, but the market has violated this structure, has printed a new high. So I will not be surprised to see dollar versus yen falling into to the default level, to the 50% retracement. We have also the 200 moving average approaching from or pointing to that level. So if that happens, it will print as the 5-0 pattern as usual, which may offer also an opportunity to go long from these lows. So if the market decides to bounce from this level, it can eventually retest the highs again, and then, or to form kind of a double top eventually at these levels, and then resume below. So shark pattern, default target at 50% retracement, not the most perfect one. The market failed to the completion point, to nail the completion point and to fall from there, but it's what we have at this point. On NOK, and let me try to push that chart here. NOK, I was expecting the market yesterday to trade, or this week to trade a few points higher, or a few points above the most recent top. So I was expecting the formation of the shark pattern at the 1618 extension, 8.73. So this was my expectation. It is possible to see the formation of that pattern after this pullback, after this relief. I will not be surprised to see dollar versus NOK printing new highs and eventually trading, retesting the weekly and the monthly resistance above. But at the same point, obviously, we need to violate the structure first in order to increase those probabilities. So now we have resistance at 8.72. So breaking that level will increase the probability to trade higher. The formation of the pattern still a possibility. We need to observe the market conditions once the price approaches those levels. If somehow the market offers some bearish divergence, it can print another relief before trading higher. So I was expecting, and sometimes we expect, and the market will not print those expectations, but I was expecting the formation of the shark at 168 extension, still a valid pattern. And obviously, for those who are familiar with those patterns, it's a pattern that can also be formed at 224 extension, and for that to happen, it needs to violate all these weekly and monthly resistance above 8.82. So this is the limits, let's say, for bears to remain into a bearish momentum here. I believe trading above these highs, the market can complete this pattern above a 224 extension, print some relief. It's a shark. The shark, as usual, will offer a relief and then a new bounce with the completion point of the bullish 5-0 pattern. So every time we see a shark pattern, and if the pattern starts to work, obviously it may offer us an opportunity to trade the 5-0 sequence. So what this means, we have a bearish opportunity which may end up forming a bullish opportunity at targets once the market achieves targets. So at this point, I need to wait for those. One of the patterns that I'm trading also, I'm also inside this Mexican peso, similar as Blake. I entered the trade a few points below the entry point from Blake. So Blake waited for the breakout of this flag or this triangle here to engage the market. I waited for the breakout of the triangle below. So I entered the trade, actually, let's say below the daily resistance, a few points below the daily resistance. When I saw the market breaking these levels, I re-entered the trade because I shared one of my entries I shared among the Forex community. Then I jump out from that trade as soon as the market starts to approach the bottom again. Note that what we have here is also a technical double bottom validated at this point with a broken neck. So we have a neck zone here at 1925. This is the neck zone. The market has decided to violate the neck zone, retested the neck zone with support from the 200 moving average also. So we have all the conditions there to see this bullish shark pattern working. And as mentioned by Blake, this is my minimum expectation. 1955 is my default target. Every time I enter the market, I trade for the 38% retracement. By default, the shark pattern will search for the 50% retracement. By default, I trade the 38% retracement because it helps me to manage my position, but the default target for that pattern is the 50% retracement. This one specific trade setup, I prefer the 38% retracement because, as mentioned by Blake, is synced with previous structure support. It's now potential resistance. So 38% retracement on Mexican peso is my minimum expectation. And from here, the process is always the same. Cut your position, start to partition your position. I decide to close half of my initial position. So if I enter with one lot, I close half of that lot. I remain with that position. And as soon as the market achieves the 50% retracement, I can keep partitioning my position, and I will trail this position with the dynamic stop above the golden ratio. So if the market touches the golden ratio, I close another portion of my position. I keep one last portion. I adjust my position and my stop losses at profit with a dynamic or a trailing stop behind. This is my suggestion in order to manage this position. So that said, following the idea from Blake. If the market decides to trade higher and break these monthly and weekly resistance, I will trail, and with a dynamic trailing stop behind, I will try to trail that position. So this is Mexican peso. Let's move to another one, and I will try to be. Do you have an interview, Dale? I believe we have. This is once you are here, just let me know, Dale. 2 hours time frame chart. I published this chart yesterday. The eventual one eventual shark pattern at 224 extension 111.28 is my not my target, but it's the level where the pattern will complete. We never know if the pattern will, if the price will respect the pattern or not, but this is the next pressure level where I will find, where I will search for eventual reliefs on dollar versus yen. Note that we have also kind of inverted edging shoulders below with a default projection just a few points above the default completion point for this shark pattern. So what I mean, as soon as the market gets that level, achieves the 224 extension, we use a retracement tool from the daily support to those highs. So let's imagine the market will print the 224 extension shark pattern, and from here we expect a minimum of 38% retracement, and this is my opinion, because as I said before, the default target for the pattern is positioned at 50% retracement, which is synced with this previous daily and 4 hours resistance price level. But I always prefer to start to manage my position at 38% retracement. So from here, everything can happen. If you start to see the market bouncing from here, an outside return, and then new lows eventually, or a retest of the highs and new highs above, will not be surprising. So that said, I always use the 38% retracement as my first level for targets. Dollar versus yen, bearish shark pattern 111.28. Aussie versus yen, and I covered a few of those yen pairs because they are trading in price levels that I consider as strong price levels. The Australian dollar, actually, I want to share with you some of those patterns that the market has printed here. So we have these.
Yeah, take your time, Andre. The guest Vince isn't in the room yet, so just take your time. Nice presentation, by the way.
Thank you. Let's see if some of those will work or not. We never know, no? So this was the halt. I'm sorry, the shark pattern at 161.8 extension. Actually, let me put that level here. I need the 161.8 extension here. So I shared, as soon as the price approaches this level, I shared the possibility for the price to print a relief here. So the market has failed that relief, and then it has printed new highs above. I believe this, and Dale can confirm this better than me. I believe we are talking about a potential 3 drives pattern above. It was forged at divergence, so the market has decided to violate all this structure and producing this major and fantastic fall below this 3 drives pattern. Now we are threatening the daily resistance, which it was printed at 78.83. Golden ratio is just a few points above, acting as potential resistance level. We have no harmonics at this point, no advanced patterns based on the most recent price behavior, but always an interesting price level, a golden ratio position at the daily resistance. Note that we are, in order to keep trading lower, we need the price to violate a double trend line, why I call it a double trend line, because as soon as the market violates these highs, a new trend line has been established. What I mean is we have a first trend line between those lows, connecting those lows, and then the market has, so this low was formed inside a consolidation period. So this is a small sideways period, which is a 2-hour time frame chart, by the way. And then the market has violated those highs. So as soon as the market violates those highs, it has started to print a new structure above. So what we mean is that we have a new trend line between this most recent low and the next one. So we have this bullish trend line connecting all those candles below as support level. And in order to trade below those levels, we need to break. First things first, we need to break this level, this ascending trend line. We need to break also the 200 moving average approaching from below. And if that happens, I will not be surprised to see a retest of this daily support again. For that to happen, we have also this trend line, this ascending trend line, connecting those bottoms, and retesting that level can also produce some interesting market behaviors. Until there, we need to wait. I need to wait for the market to develop in some type of harmonic pattern. Until there, I have nothing rather than the golden ratio for now acting as a potential resistance level. Very similar as previous one. So the price has respected this level quite a few times as resistance and support. It's resistance again, so I will not be admired to see relief on Aussie versus CAD, Aussie versus Yen. CAD versus Yen, Blake has pushed this pattern already for our subscribers. We are trading inside a bearish bat pattern, but at this point, I'm not so sure if if the price will not print a new higher high. The reason why I'm saying this is because I feel I see some type of hidden divergence information. So what I mean, we can see the strength or the relative strength index. It's approaching the previous bottoms, and the price is rejecting to go there. So the price is rejecting to follow the. So sure. It's here already.
I just want to see. Okay, I'm looking. Vincent, I don't see you in the house. You're still having trouble getting in. Send me a question, please, while Andre's continuing. Go ahead, buddy.
Okay. Yeah, and just a few more charts to
okay.
To share. This one it was a very, very fast movement on Euro versus New Zealand. I shared also this eventual sharp pattern at 224 extension. The market has reacted very well. We need to wait when we are now approaching what we may consider as a bullish bat pattern completion point. So the market has retested that those lows below 88% retracement is being now rejected, and this forms also a bullish bat pattern here. So we have one first behavior, one first impulse wave, a relief, a retest of the highs, and the 88% retracement below. So this is the default level for the bullish bat pattern. So at 88% retracement. From this point, we measure a retracement from the previous structure highs to the most recent bottom, and we expect. Sorry,
Blake, excuse me, it's all right. Blake or Andre, do you have a good link to get in? My guests keep saying the meeting will begin when the organizer arrives. So the link that we put out on Twitter is not working for him. Anyone out there have a good link for me to send to him?
Let me try. Can he join from our website? I believe he can click.
Okay, let me tell him that. All right. Yeah. Anyway, Velu and Ziggy, the links that you're using aren't the correct one. I've run into this a few times because I usually just use that for our guests. Okay, so anyway, he just said he's going to reschedule. So is that a wrap? Are you going to wrap it up?
Yeah, just finishing. So just finishing. This is Euro versus New Zealand. So I expect.
Yeah,
sorry,
I apologize for the mix-up, but
no problem. For me, there's no problem at all.
okay.
So I still expect this. I always expect a pattern to work. I have no reasons to doubt about that. But this is the BAT pattern. I expect the pattern to trade at 38% retracement. This is the minimum expectation for that, for the BAT pattern on Euro versus New Zealand. Finishing with, I will finish with DXY, silver and oil. Very fast. DXY. Let me close this window here. DXY is also pushing eventually into new highs. I was expecting, I shared this eventual bearish pattern yesterday among the community. I still expect the market to trade a few points above. It's 97.41 is the completion point for the bearish pattern. From there, I will expect a 38% retracement, a minimum expectation for this pattern at 96.50. So this is the default target for the BAT pattern. So dollar index, if they decide to threat the previous resistance level, the previous highs, it will at least offer us for sure a friendly risk reward opportunity to try shorts on DXY. Obviously, bearish BAT pattern at 88% retracement, alt BAT pattern at 113 extension. So if there's an objective to print a new high above the previous ones, so there's the 113 extension. If the BAT pattern fails you, and this is something that I shared among the communities for a while, if the BAT pattern fails you, and if it fails at 88% retracement, and if it fails at 113 extension, eventually we will see the DXY extending into the 168 extension. And if so, and if the market offers conditions, this is the crab pattern at 168 extension. But from there, we will see, and I will try to keep updating those charts if that happens. At this point, we are very close to the 88% retracement on DXY. 97.41 is the completion point for the bearish BAT pattern. And let me finish with silver. Another trade setup that I took earlier, yes. And this is
near the high.
Yeah, near the high at the completion point. As you can see, the market has nailed the completion point at 224 extension, Fibonacci extension. So it has printed the daily and the weekly resistance above, and it's now adding into, well, the default target for the pattern at 50% retracement. 200 moving average pointing between the 38 and the 50% retracement, weekly support between those levels too. So I will not be surprised at a minimum of 38% retracement in order to respect this previous structure support level, in order to keep trading above this level at 1531. So this is my minimum expectation for silver. It needs to violate this ascending structure trend line now being threat, and it needs to violate this trend line. It needs to find some support. It will find some support eventually at 200 moving average. And then we have this major eventual measure. At this point, it's still the virtual trend line below, connecting those bottoms, which may also offer some pressure if the price decides to approach those levels. It's too soon to predict that. Minimum expectations, 38% retracement. We are now facing the very first Fibonacci level at 23% extension, retracement, I'm sorry. So it's synced with the most recent support levels. And as I said before, when I published today this chart on inside ForexAnalytix, we are 1, 2, 3, 4, 5 days in a row trading in the range between the 4 hours resistance and the daily support and 4 hour support. So we are now moving sideways, trade below or trade above it. And to finish, Dale, with oil, just to finish. Let me try to push the. I'm not sure if it was a daily. No, it was a 4 hours time frame, I believe. So from here, we are also approaching a bearish scenario, a possible scenario. So I shared these golden, let's call it the golden shark pattern at 168 extension. The market has nailed that level. It has printed a new daily resistance above, a few points above, traded a 38% retracement from all these bearish momentum. So all this bearish behavior, the market has nailed a 38% retracement. I'm trying to show you the highs. So we have the weekly and monthly resistance above, and we have the most recent major support below, the weekly and monthly support. So a retracement from all these levels, and the market has touched the 38% retracement here. It's not so clear. Let me try to change the color here just to show you. So the market has nailed the 38% retracement at confluence with that shark pattern above. Mm-hmm. Okay, so and here, and from here the market has decided to fall. It has achieved a target straight beyond those targets, and it has completed another shark pattern. The 1618 extension, it works very, very well as a reversal Fibonacci level, not only for harmonic trading, but specifically in general, it works very well for reversal. And as you can see here, the market has respected that level also. So a new low below the completion point and a fast bounce. And it's now approaching, again, the 1618 extension. At this point, it's a completion point, very similar as any other. And we already know the market can extend to the 224 extension. So at this point, we have two options. One of them, a short, with this shark pattern at 1618 extension in order to remain below the previous highs, or a retest of the previous resistance, 224 extension, which will offer for sure a friendly risk-reward opportunity for those who are searching for shorts on oil. 224 extension, and from there we expect, as always, a minimum of 38% retracement or a default target at 50% retracement. It's a default target for the shark pattern. So at this point we are approaching. Actually, the market has nailed the 1618 extension already. Let me check. I was not following this.
That was a week ago, last Monday.
Yeah,
got up.
This.
Oh, that one. Yeah.
No, this one has nailed the 1618 extension, and the market has already produced some relief here. Let me just measure this relief, because if the market has nailed the 38% retracement here, and it has started to bounce from here, which is not a good sign when we are trading in a bullish momentum. If the market decides to pull back to print a relief and to find some support at the 38% retracement, it may eventually print some. It may search for that 224 extension above eventually, but again, we need to break above this level in order to increase that probability. At this point, we have the sharp pattern printed, 38% retracement already reached here. It can happen. We can see the market falling again without breaking these highs, the most recent highs. So I will not be surprised with that. But we have two levels to search for those completion points. One 1618 extension and the 224 extension above. So and that resumes what's happening during these trading sessions most recently. So let's say other markets are moving sideways, very choppy markets, nothing actually being printed significantly that improves the probabilities to, at least that allows me to engage the market or to participate or to get involved with. So there's nothing specific. So this resumes my daily approach for today.
What a great rundown, and excellent looks, Andre. We didn't miss a beat with you here today. Thank you so much for your team spirit of coming in here and doing more than just filling in, but adding on to what we do here at ForexAnalytix. So love your work, man. You know, I paid attention and it helped me. And I'm sure listeners and viewers are going to feel the same way. So thank you, my trading warrior brother. So no guests today. I'll be with Kirk Spano tomorrow to talk oil and see what kind of ideas Kirk has, as long as it's a great segue with Andre wrapping it here with WTI. So enjoy the rest of your day, everybody. Thank you for hanging out with us. And remember, what should you remember? Go ahead, write it down. Don't just, Andre, say the tagline.
Oh, don't just count your pips, no, count your blessings.
Beautiful. Adios, everyone. Thank you so much, Andre. See you guys tomorrow. You're welcome, Alina, Forex Gal, Hammett, all our community face members. Have a great day, and we'll see you tomorrow. Adios.